I think it's tempting to say like AI is going to automate everything. I think you really have to still have a view and have a driving thesis, and then understand basically how that AI is going to hold your hand through those ups and downs and wherever it's going. So, first kind of concept I would say is like for markets, the biggest risk I find is when all markets are being driven by a single factor.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host. And right now we've got Max Osbon with us. And Max, you are a venture capitalist, fintech guy, crypto guy, and big tech trend follower. We love tech on this show. I couldn't be doing this show without tech that right now we just take it for granted, Max. But, 10 years ago, Zoom was a real pain to use. And,
Oh, yeah.
10 years ago to do a podcast, really, you had to really jump through hoops. Now it's all commonplace and we just take it for granted. But at one time, this was somebody's vision. So you specialize in working with people who have vision, right? A vision of creating a product or service based on tech that's going to have an effect in the future once their vision is realized. How do you separate people's visions from pie in the sky to, hey, this guy really is onto something?
So my primary framework on anything is that there are no companies or trading strategies or anything that are run autonomously. It's all run by people. So at the end of the day, the companies, any company, whether it's Apple, Google, Amazon, it's run by people. So the primary filter, beginning, middle, and end of a 0 to 1 kind of decision-making process, it comes back to the person. They do believe in this person, their vision, their capability, and really more importantly than that, the context. So how do they arrive at this? Why now? Did they fail at a whole bunch of other stuff and this is what their like kind of last shot? Is it desperation, or is it something that lined up perfectly for them because of their career history, their opportunity? You can look at public markets, you can look at private markets, I think all in the same way. Why is this person doing what they're doing? Is this something that I'm willing to get on board with right now? I think it's a great framework for evaluating public stocks too. And that's why people like founder-led companies in public markets.
Okay. So as far as when because mostly these people are considered somewhat eccentric. They certainly don't fit the mold. Because they wouldn't be doing what they're doing if they did, right? They'd be working, coding and making a nice living, but that's not enough. So what is it about a particular founder where you will look at him and say, wow, this guy is really onto something?
It's who they're connected to and what they've done previously. So, we do some direct investing at an early stage, and I won't go into like to too many specifics because they're not like publicly traded, not available. It wouldn't be helpful in this case. But in the last investment we made was a guy who'd been in the hedge fund industry for 20 years in the utilities sector and retired and put a bunch of money into a utility startup that decentralizes ammonia, and then started the company and has all the connections and is a unique CEO founder, and it's a kind of person that you'd want to follow into battle, right? This is a good fight, and these are talented people. It's a talented person. So the previous company before that, it's like in the fintech regulation space, same story. Someone who'd worked at levels of government, connected well within government, and has a technology background. And the problem with starting companies that have to interact with the government is that so many people come in too hot with the government. They'll be kind of insulting. And you got to realize there are people on the other side too. They don't like to be insulted, even though they know that their regulations are frustrating. And so if you can come in from both angles, I think the reason why they've been successful is because too many people came in and insulted the government and they worked collaboratively. This is when they started. It was around the time when Uber was still getting kind of shut down, locally in favor of the taxi drivers because they were being too aggressive. Same with Airbnb.
Yeah, that was a fascinating story, and they came to the conclusion it's better to ask forgiveness, better to seek forgiveness than it is to ask permission.
It works in some cases, maybe not all cases.
One that really annoyed me about that was the scooter companies that just dumped their scooters in the middle of Texas, right?
Yeah.
Not a good model, in my opinion.
No, that was an interesting, terrible execution. Maybe would never have worked, but the financial model was always interesting on Lime scooters because, you're basically buying them cheap and then you're trying to rent them out for $1 a day or $1 an hour or whatever it is. And so the financial model maybe made sense, but ultimately, you ended up just creating a ton of trash. I don't focus a ton on the Lime story or that, but I am focused, a lot right now on AI's impact, whether it's AI's impact on a portfolio or AI's impact on how you spend your time efficiently to be productive.
So let's talk about that. So AI, I don't know. Certainly it can identify trends. It kind of is a progression from neural networks and quantum computing, right?
Well, the way I look at it is zeros and ones for classical computing. That's just it's binary. It's if-then statements. It's if I go over here, or if it's Tuesday, or if it's raining outside. If it's raining outside, bring an umbrella. If it's not, you don't need it. And it's just if-then statements. What AI has done in machine learning is it's just made it probabilistic. So if you add up enough of those 0 and 1s, you can do an insane amount of probability calculations. And instead of getting, should I bring the umbrella or not if it's raining, it's maybe 60% chance you should bring it, and then you add those things up enough, and then you end up replicating language, you end up replicating analysis. Where it becomes really interesting for financial markets is I would say I now basically have a team of about 12 different analysts, AI analysts, who are helping me, kind of continuously evaluate markets. Markets are probabilistic. Which, fits really well with the AI theme. So there are really no binary. There are binary outcomes in markets. You're either successful or you're not. But the analysis is super probabilistic.
Okay, so where do you think AI fits in to finance and all that? It seems to me like fraud detection, money laundering, and maybe not so much as predicting the future, but as saving you from things that you might otherwise be better off without.
Well, I think it's tempting to say AI is going to automate everything. I think you really have to still have a view and have a driving thesis, and then understand basically how that AI is going to hold your hand through those ups and downs and wherever it's going. So, first kind of concept I would say is for markets, the biggest risk I find is when all markets are being driven by a single factor. In 2022, all markets were being driven by rate hikes. It's did not matter what else was going on. Every company was falling because of rate hikes and the fear around that. And of course, COVID crash, all markets were being driven by onset of COVID. So right now, I would say the most useful kind of AI tool is sort of analyze, are being markets driven by a variety of factors or by a single factor? And I think what explains markets doing well right now is markets being driven by a variety of factors. It's maybe rate cuts, it's maybe increases or decreases in labor availability, increases or decreases in inflation. It's I could list off 10 or 15 different factors that are influencing each sector. And to me, that's a healthy market. That's a healthy market that can continue.
Okay. So, so kind of talking about markets that are just being dominated by emotions rather than fact. But, some would argue there's only two emotions, fear and greed. And then you have fear and greed. It's FOMO and kind of combination of the two. But it's a little more complicated than that, isn't it?
Yeah, it definitely is. We're definitely in a FOMO stage right now. I'm getting more calls of why do we hold any cash at all? We should, and that's just like rear view mirror investing. You have to make decisions based on the future, not the past. And buying the S&P now or whatever doesn't give you the 18 or 20% that you missed out on in the last year or so. And of course that breeds risk, right? Like calm markets make for riskier markets. Some of the things I'm concerned about right now, one is just like massive institutionalization of call selling. There's been a long time, a long project by JP Morgan and other banks to sell products that just have automated call selling behind them. And anytime you make a one-sided market where they're just like, oh, we're just going to harvest yield on call selling, it's eventually going to crack, right? It's too much imbalance on one side of an options market. And so like, I wouldn't touch any of those products that are call selling. I also don't love the concept. If I own equity, I want unlimited upside. I don't want to cap my upside by selling a call, trying to eke out 1 or 2% on a position. I know people do it opportunistically, but what I've seen, you don't want to sell calls on your Apple stock and get it called away, miss, whatever next generation of you think tech can't jump 20%, and then you see it do it in a day, and then kick yourself about why you sold calls on it.
Kicking yourself. Yeah, well, I understand a covered call strategy. I think it can be effective, but the problem is, like, who thought the market was taken off in April? Everybody was predicting a recession. The old saying, economists have successfully called 5 out of the last 2 recessions.
Yeah.
And they're never right. And anytime you see experts, any headline of any article where it says experts say, you can just put in parentheses, people who never get it right.
Yeah. Well, the experts
never get it right.
The problem with calling them experts is like you're giving them a veil of anonymity. Like, I want to hear which expert. Like, is it Paul Krugman? Because like I don't want to hear what he has to say about where tech is going. Or is it Stan Druckenmiller or something like that, who's like incredibly influential for financial markets?
Yeah. Like, okay, one man's expert is another man's Uber driver,
Yeah, exactly.
Uber drivers are experts in getting you from point A to point B, watching the map on the screen, But does that mean they're an expert? And who determines whom is an expert, right?
Right. Well, it's definitely a personal decision, or at least it's been a super personal decision for me. I like being aggressive in my own mind of like, I will absolutely never listen to a thing this person says. I mean, maybe they'll be right on some topics. For me, I don't know. Maybe we'll have some fun and take some shots at people. But like Professor Galloway has been like a perennial like issue for me. Like I don't want to follow his ideas or his trends, even though he's got a lot of press. I just don't like his framing and his angle. Ultimately, your framing is a culmination of your experience, and whatever experience he has brought him to this level. But meanwhile, like, I love listening to Stan Druckenmiller. Kind of jury's out when it comes to who's the Bond guy. Double I, Jeff Gunlock. I'm kind of like jury's out. Jeff. But you have to your own expert.
Yep. No, I gotcha. And it's kind of, you got to choose your expert, but eventually experts are like employees. Eventually they all disappoint you.
Yeah, it's like never meet your hero, right? You hold them in higher status in your mind than they could ever measure up to.
I'm going to remember that one because I think it's totally true. And yet, you can't know everything. You got to trust somebody in this world.
Yep.
And, with you, trust is a big issue because you're putting in, millions of dollars into a startup. And you got to know. And, Lee Iacocca once said there's 2 things you can never know about a person. Number 1 is if he or she is honest. And number 2 is if they're hardworking. Now, I think number 2, you can figure that out based on prior accomplishments. You can get some idea. But the honesty test, is really difficult. You could give them a battery of psychological profiles. I would say what he was really saying there is you can never tell if somebody is a sociopath until you see them in action, you know?
Yeah, one of the some of the really seasoned veteran venture capitalists say they've factored in that like 10% of their, founders or some number that will be like flat out lying to him, flat out lying to them, right? And they just have to model.
Hey, and nobody wants to be the bearer of bad tidings. Easier to be a yes man than it is to be a no man, right?
Right. Yeah. Yeah, I mean, I tend to think optimism is the better strategy, especially being a young person. It's like lots of time to let things not go well, and then get your wins. Investing is, I think, all about asymmetric upside. So you have to take a risk. You have to let some things fail. I think even Ken Griffin, Citadel says like we've lost more money than any other hedge fund. He's also made more money than any other hedge fund. I think it just goes hand in hand. You have to be willing to take losses.
Yeah. There's a lot of wisdom out there, but it's choosing between it. Now with the internet and all that, you have unlimited access to it all, the good, the bad, and the ugly, and most of it is ugly. Hey, so trends, looking ahead, fintech is your bailiwick there. What can we look forward to here?
Well, I would say, within fintech, just one of the frustrations with the field is if you watch the Apple development conference from this week and you see the things that they're able to do with the devices, right? They're leveraging machine learning, optical character recognition, an enormous number of automations to roll them out to Apple products. And it's like pushing the technology to the absolute limit of what it can do. And then you get back to fintech and you get, we struggle with like basic math or ledgers, or like you see all the different like failures of the different what was the most, I haven't been following it down to the detail, but there was a regional bank that failed that was maybe commingling accounts, and like, it's from a technology perspective and from a math perspective, because my background is in mathematics. It's just like regular algebra, right? And it's not hard from a math perspective. It's not hard from a concept perspective. For some reason, it's like the technology lags in fintech in that area by just, I don't know, decade, 2 decades. Yeah. It's like if we could just take what Apple is doing, we would dramatically improve, what's going on in the fintech world. One other trend, though, the trend that I would say is capturing my attention the most right now, I have a call later on this today, I'm still trying to piece it together, is quantum. And it's not necessarily related to fintech, but it is a really important kind of emerging concept. And if I get a couple minutes, I can frame it for you.
Yeah, please.
I think is interesting. So we're hitting the physical limits of what NVIDIA GPUs and computing can do. The physical limits are defined right now by energy. So it's like you can build a bunch of data centers. It's actually not hard. It's not as hard to build a data center as it is to build more electricity. And how do you get that electricity? Is it going to be solar? It can't be solar because you need, it can't be renewables because you need consistency for the data centers.
You can't afford to go down. I mean, I guess you could put a battery, a megapack battery or 2 or 3, or some of them are so big, you probably need 20 of them.
You need a ton, and then they consume just an unbelievable amount of energy. And then you have the 5 nines of reliability. You can only have 4 minutes a year of downtime, and like anything more than that, no one's going to use your data center. So it's like, so do you do nuclear? Well, it's going to take. I think Bill Gates said today they're building a nuclear power plant. It'll be alive by 2030. So it's like, what are we going to do for the next 6 years? It's like you need things now. So anyways, I think about quantum because if we're going to hit the limits of what we can do with traditional computing, quantum, the word quantum is really into etymologies that helps you like understand the framing. Quantum is a reference to the pieces that are inside the atoms. And so when we build computers now, the smallest we can get the transistors is sort of like 20 atoms wide. But I know that's not a perfect description for actually how it works, but that's kind of the That's the limit we've had. So if we want to get even smaller, we have to use pieces of atoms. Those are quantum, quanta or quantum. And then if you want to use the computer based on those, you can basically dramatically scale up its processing power. I don't really understand completely how it works on every level, and I don't think anyone really does. There are some really weird things that happen in quantum computing, quantum mechanics. All of it is experimental right now. So IBM has the most, kind of advanced current quantum structure. But my understanding is, again, like they make more money selling quantum preparedness software and stuff than they do actually selling quantum assets. So what's going to happen? So my view is, if you could, if it takes 6 months to train a model, an AI model on NVIDIA GPUs, and it costs $300 million, you develop a machine learning algorithm on quantum when it actually functions that would do the same amount of work in like a minute, right? And that would be, we talked about orders of magnitude a lot in AI. Taking 6 months of work and compressing it down to a minute or something like that, that is like, it reminds me of what it used to be, like a computer in an entire room. Now, with the Apple devices that we're probably talking on, like are dramatically more efficient, more powerful, and they fit, in tiny bags. So it's like, you don't think these order of magnitudes improvements can happen, but they certainly can happen. So when are we going to get breakthroughs with quantum? I don't know. Like it's, but to me, it's the only thing that's going to answer the efficiency issue with machine learning. Like we can't be spending hundreds of billions of dollars to create giant warehouses to train these models when there is eventually going to be a breakthrough that simplifies that. It's just that is the breakthrough. So where do we stand with it now? I'm working on this now, assuming that at some point over the next 5 years, there's going to be a really interesting quantum related investment. I don't know what it's going to look like. I don't know where it's going to be. I don't know if it's going to be IP related. I don't know if it's going to be momentum because they've solved it and they're going to be running away with the technology into the future. But I think now is the time to start thinking, just like if you were thinking about AI 10 years ago, you eventually arrived on GPUs and NVIDIA. I think you have to think about quantum now to see what's going to happen.
All right. So, during the gold rush, only a very few miners got wealthy, but the companies that sold the pickaxes and the dynamite and the clothes, the Levi Strausses of the world, they cleaned up. So you outlined the problem here of energy shortages, electricity, particularly because these still are highly regulated industries, not like what they used to be, because you've got pseudo competition in distribution. In the more favorable economic climates and climates too, where people are going to want to build these multi-billion-dollar data centers, these utilities are going to kill it. And I would also say the utilities around the nation's capital, because don't think they aren't the biggest investor in AI out there in every aspect of what the government does. So, those utilities are in a bind because, like you said, nukes take 10 years with licensing and everything else, and don't believe modularity because that really doesn't speed up the process, regulation, bog, and everything else. So we're going to need more energy.
Yeah.
To think it's going to come from renewables is naive.
Yeah.
And
so you're walking into a really interesting topic that's fun to explore and not an area that I've done enough work on yet, but natural gas is the sort of fossil fuel solution. It's cleaner, more efficient.
Oh, yeah.
It's funny because we have to have trade-offs. We have to have cheap energy, so we can't like throw out fossil fuel, but you can use natural gas and get some really compelling results. And so that's still not popular at all among a Democrat, and not the politics conversation, but it's just not the Democratic kind of narrative. Doesn't even want to talk about natural gas. So there's a lot of energy assets that I think are really compelling, probably compelling, because of what you're talking about. Like you need to have the energy, the electricity to support either this transformation or just like power the world. Like, I like there are these choices. Like, there's no such thing as wealthy economy without cheap energy. It's like there's not a single developed economy that didn't have access to cheap energy. It's like the fundamental base. Yeah. So yeah, I wonder, because the last decade prior to COVID, the last decade of energy, Exxon or anything, there's been like, it was horrible. Like from an index perspective, if you look at XLE, that's sort of the benchmark I'm referring to, or Exxon, it was horrible. And then all of a sudden, out of COVID, it's been an unbelievable asset class to own. It's been the only other kind of performing asset class outside of tech. And so how do we look at energy going forward? I think it's a really important question to answer for investors. Do you get deep down in the weeds and you pick, stocks? Do you get, really well integrated into the different assets out there, or do you benchmark it with an index? I don't know.
Hey, well, the good thing, if you're getting into nat gas, which you're speaking my language now, been a big component of it. It's been trading at a discount per BTU to oil for decades now. And when I was a child growing up through 2 energy crises, it traded pretty close to parity. And nice thing is, you actually get paid to wait, because they pay out above average dividends, almost a couple points behind the actual inflation rate. But the technology to manage the grid, all right, because the problem with the grid is, and most people don't even know it, like you have transmission loss, 15-20%. Yeah. And they kept saying, well, we're going to come up with these superconductor power transmission lines, and we'll have 1 or 2%, and they'll be nitrogen cooled. Well, evidently that wasn't too practical. So grid management, and, for the rest of us, residential users and commercial users out there, in these states where they start building these data centers, it's going to be a fight for electricity. Now, in theory, they could bring in their own generator and do it themselves, and maybe if they own some nat gas wells, they could just feed that generator right off the wells. I mean, the crypto mining is like insane. It's basically the same thing as AI. So, just interesting things. Well, I think you've helped us look at trends in a different way here, Max. If we want to connect with you on the web and take a look at what you're doing, how do we do that?
Yep. So I write a pretty widely read article on my website, osboncapital.com. It comes out weekly, so I'll be writing it today, and it'll be out tomorrow morning, Thursday morning, depending on when this airs. It comes out every Thursday morning. That article is where I both write down my own thoughts to codify my own thinking, and to share it with other people, to put it out publicly, either to get people to throw stones at it and tell me why I'm wrong, or to reinforce it. Yes. So that's my primary thing, is I write that article. I've been doing it every week for many, many, many years. It's my commitment.
All right. Hey, well, the link to your site is in the show notes to this interview on financialsurvivalnetwork.com. When you go there, please sign up for your free newsletter. If you got a question for Max or myself, we'd love to hear from you. Shoot me an email to kl@kerrylutz.com. Max, been a pleasure. We'll definitely talk to you again. And hey, we're going to sign up to your blog, your newsletter there.
Thank you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.